lower and low mid income earners. Adjustments to income. This is the longest section of the child support worksheet. In the way that adjustments section follows the income section, this worksheet parallels an income tax form. The adjustments section begins with line 8, which is the adjustment a parent gets for having children not of this marriage living with them. A woman having custody of a child from a prior marriage would be a typical example. The adjustment is calculated by multiplying the number of such children by the federal dependency exemption. The only catch is that you must subtract from that product any support received on behalf of that child or those children. That means that if the monthly support order is $300 or more, and the ex-spouse is current on their payments, the line 8 adjustment usually ends up being 0. Note the language of the parenthetical indicating that the support received cannot exceed the federal tax exemption. That keeps the line 8 amount from ever becoming negative, and Roxy applies that limit automatically. Here's an example. Assume one child living with the parties is the mother's from a prior marriage, so a 1 is entered in the first field of the gray box. The 2010 federal dependency exemption is $3,650. So if you scroll down to the bottom of the gray box at this point, you'll see that the amount of $3,650 is on line 8 below the gray box. That amount is 1 times $3,650. Now, if mom received $650 of support in 2010, we'd enter it in the support received field, and the total below the box would immediately change to $3,000. That is 1 times $3,650 minus $650. I mentioned it already when I discussed the default file, but in order to underscore its application, I'll repeat that because the federal tax exemption stays the same for a year at a time, it makes sense to set this amount in the default file and update it every January. I've already talked about the default file in an earlier section of this instructional video, and so I'm not going to repeat that information again here now. I am, however, going to try to keep things simple in our example, and so I'm going to use the shifted tab to backspace to the top of the gray box, and I'll erase the line 8 entries. That'll allow us to tab forward and leave the line 8 gray box and go to line 9. Line 9 is for amounts of child support paid by one of the parties for the support of children not of this marriage. Here, a typical example might be amounts paid by a father to an ex-spouse with respect to a child born of that prior marriage. Now, line 10 is for annual court-ordered spousal support. And it's interesting to note that in prior versions of the statute, line 10 used to read support paid to a former spouse, and it left open the question as to whether the current spouse or the soon-to-be former spouse was to be included. You see, the present language changed that to any spouse or former spouse, which clarifies that the present spouse would be included in calculating the amount to be entered on line 8. Line 11 is an adjustment for local income taxes paid by either the father or the mother. The first field in the gray box is total wages subject to income tax. This is an overridable field that is completed by Roxy, taking the sum of lines 1A, 1B, and 2D. In most instances, this is correct, but not always, and that's why it's an overridable field. In our example, Roxy took the $45,000 annual gross income from employment on father's line 1A. In the case of mom, it took that line 1A amount of $45,000, but it also included the $2,832 in net self-employment income on line 2. The next field in the gray box is the tax rate. We default this field to 2% because it's a common local tax rate, but it can vary from locality to locality, and you may want to change the default to whatever percentage you find yourself using the most. In actual practice, it's likely you'll be changing the percentage quite a bit. So again, set it to the prevailing rate, but be prepared to change it on a case-by-case basis. Finally, with respect to line 11, note that the field underneath the gray box, the line 11 amount, is overridable. The reason for this is that the local tax calculation is not always so straightforward as taking the taxable income and applying a fixed percentage. In many instances, the local tax is paid to various localities, and therefore the amount of tax paid by a party is not the application of a single rate. This happens when a person's job takes them to more than one locality, like an on-site repairman who works in different cities, or someone who moves their residence from one locality to another during the course of the year. That's not even considering the fact that most localities have both an employment tax on income earned in that locality and a residency tax based on income earned in other localities. Then, too, the residency tax is often subject to credit limits and rates that vary widely from one locality to another. Line 12 is for work-related deductions. Union dues and uniform fees are listed, but certainly the list can be extensive. Two things to note. One, the deduction must be mandatory and not voluntary. And two, taxes, Social Security withholding, and retirement plan contributions are not to be included in this adjustment. Now that's the last of the adjustments. Line 13 is merely the sum of adjustments on lines 8 through 12. In our example, Dad's total adjustments are $900 and Mom's are $956.64. Line 14A is the adjusted annual gross income. It's calculated by taking the total gross income on line 7A and subtracting the total adjustments on line 13. Here, Dad is $44,100 and Mom's is $46,875.36. Now line 14B is the cash medical support maximum. It's a limit which the cash medical support calculated on line 20B may not exceed. The amount comes from the federal poverty guidelines that are published by the U.S. Department of Health and Human Services. The guidelines are published annually, and the booklet containing them is available from the HHS website as a downloadable PDF file. I'll mention that at the time we're making this video, Roxy is set to $10,830, but that amount changed to $10,890 in the last week or so. January 20th, 2011 was the publication date of the new amount. Now, the Roxy version that I'm using to make this video does not have the new amount yet, so I'll use it as an example of overriding, like I did on line 1B, by changing the amount to $10,890, which then appears in red. In actual practice, we set this value when we ship the program, and then we update it at the beginning of succeeding years. So if you allow Roxy to perform the automatic update, there's little reason that you'll ever need to override it, as I did here. Also, don't attempt to increase the number in the number of persons in the family field. The directive from the Ohio Department of Job and Family Services is that this value should remain at 1, regardless of what you consider the actual family size to be. This interpretation may be based on the use of the word individual in that line. Let's take a look at how line 14B works. The maximum is established by looking back at line 7A. If the amount on line 7A, which is the total annual gross income before adjustments, if that amount is less than 150% of the federal poverty level, then a 0 is entered on line 14B, and no cash medical support is due from the obligor. In other words, the maximum limit is 0. Now, in the event that line 7A is greater than 150% of the federal poverty level, then multiply the amount on line 14A, the adjusted annual gross income, by 5%. That's the cash medical support maximum. Therefore, the amount on line 30 cannot exceed this amount. In the case of this father, that amount is $2,205. Here's the ODJFS table that's used on line 20B of the worksheet to calculate cash medical support. You find the row that matches the combined adjusted gross income, and then look to the column for the number of children. Now, if 5% of the AGI is less than the table amount is not used. Instead, the 5% amount is used. In the table that you see on the screen, below the horizontal dividing line, you see the corresponding AGIs. It's showing you the AGIs below which the table amounts are not used. Line 15 is the combined annual income that is used for getting a value from the statutory child support tables. It's the sum of the amounts on line 14A, columns 1 and 2. In this case, the total is $90,975.36. Lines 16A and B are the father and mother's respective pro rata share of the combined income. The amounts on line 16 are figured by dividing a parent's line 14 amount by what's on line 15. Here the father's percentage is 48.47% and the mother's is 51.53%. Line 17 is an amount taken from the statutory child support table. Basically, it works by finding the row that matches the combined gross income and then looking over to the column for that number of children. This represents the amount it takes annually to support a particular number of children, in our example 1, in a lifestyle in keeping with the party's combined annual income. The first 3 check boxes in the gray box for this line let you switch between the 3 lookup methods referred to in the statute. I mentioned that you can find the row that matches the party's combined income. Well, in actual practice, the combined income is rarely an exact match for the row amounts, which go up in $600 increments. Your combined gross income will usually fall between 2 rows, and the statute provides that you can use 1, the amount in the next lower row of the table, 2, the amount in the next higher row in the table, or 3, interpolate or find the value between those 2 amounts. I'll change the X's in these boxes so you can see how line 17 changes. The difference between the lower table row and the interpolated value is approximately $32. The difference between $10,747 and $10,715. When you consider that we're referring to an annual amount, you can see that the difference doesn't even amount to $1 a week. Roxy defaults to using the interpolation method, which is inherently the most accurate, and I believe that most courts do it that way. I may have restored the lookup method checkboxes a little too quickly back to their original default states. I didn't show you the effect of the third checkbox, which yields the highest annual child support obligation. So before we move on to the fourth checkbox dealing with combined annual gross incomes in excess of $150,000, I'll mention that the lookup method represented by the third checkbox gives us a $10,767 annual obligation. Compared to the low method, which gave us a $10,715 annual obligation, that's a $52 per year annual difference. So that ends up amounting to exactly $1 a week. So regardless of what checkbox you select, it's not going to be a critical entry because there's not that much difference between the lowest and the highest. I think it makes most sense, like I said, to use the interpolated value represented by the second checkbox. The tables, by the way, can be viewed by going to the Help menu and selecting Child Support Tables. You can also visit the Line 17 Help topic from the Help menu and review the section of the Ohio Revised Code that deals with the 3-table lookup methods, as well as what to do when the party's combined income exceeds $150,000. That's the other aspect of line 17 that you should be familiar with. Because the tables only go up to $150,000, there are 2 suggestions on how to calculate child support amounts for higher incomes. The first way is to find the percentage that child support bears to combined gross income in the tables at $150,000 and apply that percentage to whatever income you have in your case. The second method is to cap or limit child support to whatever amount the corresponding $150,000 amount is. Roxy will calculate the support either way, depending on whether you check the fourth checkbox in the line 17 gray box. If you check the box, you're going to apply the $150,000 limit. If you leave the box unchecked, it doesn't apply the $150,000 limit. I don't think all courts and agencies in Ohio deal with this issue the same way, but understanding that courts and agencies report this information to the federal government, I would guess the majority of jurisdictions do not apply the limit. Lines 18A and B are the parties' respective child support obligations. The amounts are calculated by taking each party's percentage on line 16 and multiplying by the basic combined child support amount obligation on line 17. Here we take father's 48.47% on line 16A and multiply it by $10,747.53, and we get $5,209.33. Line 19 is for child care expenses, and it's interesting because the way this line was handled evolved over time. Basically, line 19 allows a parent's child care expenses to be added to the support obligation so that both parents share in the cost of this expense in proportion to their line 16 percentages. To calculate the line 19 amount, you take the child care expenses and subtract any tax credit the parent is entitled to, whether they take the credit or not, and that's the amount of the adjustment. In the late 1980s, the program took child care expenses and the parent's income and used the table on the IRS Form 2441 to find a percentage. The percentage from that table was then applied against the actual child care expenses, and that was the federal tax credit that was subtracted from a party's child care expenses and placed on line 19. Based on my experience and family income statistics published by the U.S. Census Bureau, I believe that that method works most of the time. However, in cases of lower income families, let's say a single parent family with one child and less than $18,000 of adjusted income, due to the personal exemption, the child dependency exemption, and the standard deduction, that parent may not owe any income taxes. Therefore, the child care credit is reduced to zero, and it's not the amount that you would get by using Form 2441's table. In those cases, you must be careful to check that an incorrect amount is not being subtracted from the parent's child care expenses. You do that by instructing Roxy to do a rudimentary income tax calculation to see if the low income condition applies. And that's the purpose of line 19's gray box. What you're doing there is providing most of the information that's required for Roxy to do an estimated tax calculation. We start with the total child care expenses. That's usually straightforward enough. The second field, however, sometimes causes confusion. It exists because child support worksheets and the IRS have slightly different definitions as to what constitutes an eligible child care expense. The child support guidelines allow an adjustment for child care expenses if they are related to a parent's employment or education. The IRS, on the other hand, only allows employment-related child care expenses to qualify for the tax credit. Therefore, although total expenses and qualifying expenses are often the same, you must make an entry in the second field, qualifying expenses. I get calls every so often where someone says that the credit's not being calculated, and sometimes it's because, although they entered total child care expenses in the first field, they left the qualifying field blank. The remaining four fields are for calculating the federal tax credit. The earned income information is required because earned income can be a limitation on the amount of the credit. Next, because the credit is based on adjusted gross income, if a party has remarried and is filing jointly, a subsequent spouse's earned income may also need to be considered to correctly calculate the credit. IRS Form 2441 is reasonably clear on the mechanics of this calculation if you wanted to see how it works. The Form 2441 percentage table uses adjusted gross income for purposes of looking up the percentage, and that's the purpose of the gray box's next field. Finally, the number of children is considered when calculating the credit limit. For one child, the maximum amount of child care expenses that can be used to calculate the credit is $3,000 for one child and $6,000 for two or more children. Now, don't be confused by this. We're not talking about limiting the amount of child care expenses a parent can use as an adjustment on the child support worksheet. We're talking about a limit on the amount of child care expenses that the IRS allows for purposes of calculating the credit. Sometimes when parties learn about the limit, they complain, not realizing that observing the limit is a good thing from the standpoint of the parent incurring these expenses, in that it increases the obligor's child support obligation. That information is enough for Roxy to calculate the credit, but it's not enough to test for the low income limit that I mentioned earlier. For that purpose, we have to check the check boxes and fields below the gray box's dividing line. The first checkbox tells Roxy that these parties are not in a low-income category and therefore ignore the issue and calculate the credit based on the information entered in the top half of the gray box. There are two reasons for doing this. First, it avoids doing extra work, and second, it's not going to make any difference in the calculation anyway. Now, the second checkbox is for a situation where a party's credit is always the same. An example might be a lower income parent that has had the same tax situation for the last several years, and you know in advance that they're not going to owe any tax, and therefore the credit will be zero. Check this box and then enter the known tax liabilities, zero in the example I just mentioned, and you need not complete the remaining fields in the gray box. Now, the third checkbox is for situations where you expect or have no idea and just want to play it safe that the low-income limit may come into play. It would be best to have a prior year's tax return for reference. When you check this box, it's necessary that you complete the next 5 fields. The first is filing status. Use one of the 5 codes we've listed here. S for single, MJ for married joint, MS for married separately, HH is for head of household, and QW is for qualified widow or widower. The next field is the standard or itemized deduction. Lower income taxpayers probably use the standard deduction more than the itemized deduction, and the fact that the standard deduction stays the same for a year, like the dependency exemption, makes it a good candidate for the default file that we've mentioned a few times already. Sometimes the biggest clue to whether a party itemizes their deductions is whether they own their own home and pay significant amounts of interest on their home mortgage loan. If your party itemizes their deductions, you'll want to have a copy of their last year's tax return and current information for verifying that their deductions have not changed substantially from the previous year. The last 3 fields, the exemption amount, the alternative minimum tax, and the foreign tax credit, are all amounts that you'll want to consult last year's tax return about. The exemption amount is the current year's exemption times the number of qualifying persons. For a head of household with one child, that would be 2 times $3,650. You'll recognize the $3,650 figure as the 2010 dependency exemption and something that changes every year. It's $3,700 in 2011, for example. You may not want to set this amount in the default file because the amount that you enter on this line changes depending on the number of children and other dependents that the party taxpayer includes on their tax return. The alternative minimum tax rarely comes into play in lower income situations because the AMT is designed to apply to higher income taxpayers with excessive deductions. The foreign tax credit almost never applies, and if you need additional information about these items, you can visit the IRS website and download PDFs with all the information you need to learn about these taxes and credits and more than that. The final checkbox relates to whether to include the Ohio child care credit when you calculate the tax credits and subtract them from the child care expenses. Logic dictates that if you want to be financially accurate and avoid the child expense payor from double dipping, so to speak, you would include the Ohio credit in the calculation. However, there are a number of reasons why you may not want to do that. One, the language of line 19 refers to credit singular, not credits plural. Two, when the worksheets were first enacted, there was no Ohio child care credit. Therefore, it would have been impossible for the legislators to have intended that the Ohio credit be included. Three, if you use other line numbers in the worksheet as a guide, when you look at line 8, for example, where the dependency exemption is included in the calculation, and I'm going to flip back to page 2 and let you see the language of line 8. Only the federal exemption is included, not the Ohio exemption. Finally, when I spoke with a domestic relations judge about this issue, she told me about an informal survey that she had conducted and found that the majority of jurisdictions do not include the Ohio credit. Roxy isn't designed to decide these issues. It's designed to let you decide them, and that's the purpose of this last checkbox. Now, one final note about line 19 is the fact that the line 19 fields below the gray box are overridable. So Roxy recognizes that preparers could have sound tax accounting reasons for doing so. The title screen that you see now shows you what we mentioned earlier about how lower incomes can limit the child care credit. You see that for a head of household with one child and $19,350 adjusted gross income, that no tax is due. For two children, the floor is $15,700. Now, the last question of this section is line 20. You can think of it as the focal point of the changes that took place in the worksheets when they were redesigned in July of 2008. Line 20 is the cash medical support obligation. It has two parts. Line 28 is for out-of-pocket costs necessary for providing health insurance for the children. The formula for putting an amount on this line involves taking out-of-pocket health insurance costs and subtracting the costs for persons who are not the children being addressed in the worksheet. As I mentioned earlier in connection with line 7B, that would be the difference between the cost of an individual policy and a family policy. Next, you would take that difference and divide by the total number of dependents covered under the policy. This would be important if there were children from another marriage covered under the policy, or adult children, or other dependents. Finally, you take that amount and multiply it by the number of children who are subject to the order, and that's the amount that goes on line 20A. Line 20B is the actual cash medical support obligation. There's a considerable amount of information available about this in the Help menu's submenu for specific line numbers. I think I mentioned earlier that the United States Department of Agriculture publishes a booklet annually. Although I don't think they issued one in 2010, it's called Expenditures on Children by Families. It compiles the statistics on family expenditures on children. Obtaining a value from the booklet is not as straightforward as one would like, however. For starters, there are 7 tables for different geographic areas, for single-parent families, and for rural areas. The tables themselves group children by age, but they're compiled for only one child, and consequently there are formulas that you've got to use when more than one child is involved. Although the entire booklet is not accessible from our Help menu, there is a topic that reproduces the applicable tables. I'll mention now that the Ohio Department of Job and Family Services is empowered to publish a homogenized table from which the value on line 20B is taken. Thankfully, that obviates the necessity of getting involved in calculating the appropriate amount on your own. You can find the table in the Help topic item ODJFS Cash Medical Support. I'm just telling you these things to give you some background and understanding about how this line works. In actual practice, you'll do nothing. Roxy does it all automatically. The final thing to mention about line 20B is that the text box is overridable. Again, we designed it that way in recognition of the fact that preparers may want to vary the calculation depending on extraordinary circumstances, or even to dispute the homogenized table that is issued by the ODJ